Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I've got some buy-to-let rates from as low as 2.35%. While the residential mortgages over the last few weeks have been going up, some of the buy-to-let rates have been coming down significantly. Now, some of that is because lenders understand that some buy-to-let landlords wouldn't pass the stress tests at higher levels. So how they can get around that is by offering a low rate and sometimes making up some of that money with fees. Now, some of these will have quite high fees, but some of them have got reasonable fees of less than £1,000. And the majority of these rates are less than 4%. So in this video, I'm going to give you all the details on who these lenders are and what could you do if you're looking for a buy-to-let property right now or a refinance for a buy-to-let mortgage. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 43,000 subscribers. If you have a look around this video, we're a smidge away, a few hundred people at most. And let's get some views on this video. How do we do that? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm, and that's really helped the channel grow. So thanks to everyone that does that. So, buy-to-lets, they have a certain rules. They have stress tests that have to legally stack up before they can lend you the money. And that means that the monthly payment has to be less than the rent that you're getting. And you have to make a certain margin on that. Now, that makes it a bit easier for investors. If you're not particularly sophisticated as an investor, the lender will check that you're going to make money. And if you're not, they won't lend you the money. Simple as that. Now, obviously, things could go out of your control, like broken boilers and stuff like that. But you can also get insurance for that. And so what you have to look at is that some of these higher mortgage rates that have been going out recently, people just wouldn't be able to borrow money. So how lenders get around that is they reduce the interest rate and then they add the additional into the fees. Now, so you have to work out, does this deal work out for you completely? But this does get some people out of a pickle that might not be able to remortgage at the moment on the higher fee. You've got some people like me, I've got a property in Hastings where I think it's 1 point something percent. I think it's 1.25%, 1.5% at most. Now, if I went on to a rate at 4.5%, that means my mortgage payment would triple in that scenario because buy-to-let mortgages are on an interest-only basis. So how I could get around that is I could get a lender that would give me a rate for, say, like 3%. My payments would still then double on a monthly basis, but I could be more likely to pass the affordability. Now, don't worry about my property there. I've got more than 60% equity in it, and I've got a very good social housing contract in there. So I'll be all right, and I will pass the stress test, but I'm just giving you an example on how it works. So right now, residential lenders, they have been increasing rates at the moment, and that's because the swap rate has been going up. But the buy-to-let market is quieter. The residential market is also quieter than normal. Yes, it's ticked up a little bit in May, but it is a fairly quiet market at the moment. And lenders want to lend. And so they're looking at ways that they can get you borrowing money, and being a bit more competitive on rates is where they start. So let's have a look first at HSBC. So obviously a big lender, but this time we're talking about just their buy-to-let rates. These are not residential rates at all. So they have a 2-year deal, and the rate on that is really good. It's 3.74%. Now that will give you 60% loan to value, and the fees on that are $3,999. So if you're borrowing a 50 grand mortgage, probably those fees are going to be really high and prohibitive. However, if it's a 200 grand mortgage plus, those fees aren't too bad, and that deal looks quite good for some people. So that's one option that they've given you there. What other deals have they got here? They have another rate here that is on a 75% loan to value. So this is also a 2-year deal, and it's at 75% loan to value, and that's at 3.94%. So this is a standard buy to let. A lot of landlords would get 75% loan to value, and the fees are the same, £3,999. So 2 good options there, and they're not all just giving it to people that have got massive equity. All buy-to-let lenders would want you to have at least 25% equity or deposit in the property. So HSBC, good lender, go and check them out. What about NatWest? So NatWest, they've been really competitive over the last few years in the residential market, and now they're looking at the buy-to-let market as well. So they have a 2-year deal here. It's more expensive, but the fees are lower. So I'm giving you other options, and you can work out which one works best for you if you're looking at this. So it's just a smidge above that magical 4%, 4.1%. I don't know why they didn't just go 3.9%, just because for a lot of people, psychologically, that's getting them to jump in, but they haven't. It's 4.11%. The loan to value on this one is 60%, so you need a 40% deposit or equity. And the fees on this one aren't bad. Way lower, £995. So you need to work out that if that works for you. What do they have on the 75% loan to value? It's slightly more expensive. 4.33%, 75% loan to value. And the fees on that are the same at £995. So that could be someone to go and check out. Mortgage Works. The Mortgage Works have some really good deals, but you need to, again, work out, does this work? Because they have pretty high fees, but the rate is really low. It's 2.79%. That makes the affordability work for some people, especially if you bought in the last few years and you haven't generated an uplift in equity. This could be an option. This is a 65% loan to value product, and the fees are 3%. So that has a hefty fee. You need to go and check that one out. But I've got a better rate than that. And this is really low, but you're going to have to work out whether these fees work for you. So we've got a lender I've never heard of. They're called Capital Homes. And they've got a headline rate of 2.35%, which is really good. And that might mean that you pass the affordability. This is what I would call more of a subprime loan. It's really what you should look at if you're in a pickle, just to keep your property and get you through to the next cycle of lower rates. The fees on this are 7%. 7% fees. That's not cheap, is it? But that monthly payment is significantly lower. And you could look at putting that over 5 years and it wouldn't be so bad. So look, residential mortgages have gone up, but the buy-to-let market is getting a little bit more competitive, which is positive. So I would check out some of these, depending on the value of the property you're looking at. If you're looking at a high value property, HSBC might be your best option. A lower value property, NatWest might be your best option. Or if you want to make the monthly payments affordable, look at the Mortgage Works. And if it doesn't stack up even at that 2.79, then you're going to have to look at Capital Homes, who have a much lower fee, much lower monthly payment, but way higher, higher fees, much lower rate, but the fees are significantly higher. Let me know in the comments, which one would you pick? I'd love to know which opinion you have. Do make sure you smash like. Do share these videos, guys. That really helps. I'm sure you know someone that's a buy-to-let landlord. You could share that, WhatsApp it, email it, or Facebook it to them. And make sure you check out the fundamentals of property investing. It's less than £30. You can get that in the description below. We'll teach you how to source properties below market value, how to refurbish those properties, and then what strategy you should be using. Buy-to-let, serviced accommodation, HMO, or something similar. Do check that out, and do check out all the other content as well on the channel, including this video right here.